Rising rates equals rising prices? Yep, you heard me right. And if you looked back a year ago, the prognosticators of our marketplace, the experts were predicting with rates going up that prices were going to decline. That is definitely not the case. We're going to talk about the Eastside, Seattle, and Snohomish County real estate market update today. I'm Tony Meier with Windermere Real Estate. For 34 years, I've been an avid study of the real estate market, using that information to help our clients make educated and smart real estate decisions. We're going to distill this month's information down so you can do the same. We're going to talk about rates, months of inventory, median sales price, and average days on the market. First up is interest rates. Well, unless you've been living underneath a rock, you know rates have been headed upward. We aren't up as much as surprisingly we have been earlier this year compared to a year ago. September was 6.7, we're at now 7.31. We are edging up. As I record this video today, we're nearly 7.75. So rates are headed up, and hopefully we see a retraction in that as we close out the month here. But right now, October rates are headed up. What's that doing with our months of inventory? Our months of inventory remains pretty darn healthy. So if you look at the 9-year average, statistically, September is going to be its highest months of inventory for any given year. So the 9-year average is 1.4 months of inventory. We're sitting now at 1.6, but compared to a year ago at 1.9, our market is definitely more favorable than it was at that point. Anything under 2 months is seller favored, so we still remain favoring a seller on the east side. East side residential prices. So a year ago we were $1,350,000. We're up 5% approximately, almost 6% from a year ago at $1,427,000, although our median is starting to edge down. Again, this is what you would normally expect this time of year. Part of that has to do with the upper end starts quieting down. The average homes, the everyday homes, people still need to buy those. The discretionary homes tend to slow down at this time of year and in fact come out of the marketplace. So that drives the median price down going forward. On to the average days on market. So a year ago we were at 28 days. We're now at 21. You can see that number is ticking up a little bit on the east side, and that's somewhat a function of months of inventory moving up, and that makes sense. On to Seattle months of inventory. The 9-year average is 1.3, and again, normally September is the high water mark for these numbers. September of this year is at 1.9. But we are certainly a better market than we were in Seattle last year at 2.3 months of inventory. We'll see in the coming months here whether Seattle reaches balance or retracts as it would normally expect to going forward. Median price. Last year was $900,000. We bounced up nicely to $926,000, up from the last 2 months in pricing. And average days on the market. Seattle is slower than it was a year ago. You can see the trend has been kind of floating upward, but we were 20 days on the market, 24 this year, and that will be telling on pricing going forward too. Lastly, Snohomish County, months of inventory. Well, the 9-year average for Snohomish County is 1.3 months, and again, this would typically be the highest levels seen in any given year. It is right on track with that at this stage. Compared to a year ago, it was 1.7, so the market's sitting in a much healthier position than 1 year ago. Median price in Snohomish County is also up. Was $735, now $750. You can see it bounced around a little bit. July $751, August $730, back up to $750. Certainly the notable thing is, just like Eastside and Seattle markets, the median price is higher than it was a year ago. So if you waited to buy, it wasn't the best decision. Days on the market. Average days on the market a year ago is 28. It's ticking up now, but it is still better than it was a year ago at 24 days on the market. If you've got questions about the market, of course, we're here to help. If you want to dig into specific areas, we've got intel on all that. You can reach out to us by phone at 425-466-1000. You can leave us a comment down below. If you have to do so, please hit the subscribe button and the bell icon to be notified of our future updates. And we'll look forward to talking with you next month. Take care.